Hello, everyone. It's really a pleasure to be here today. As Stefan mentioned, my role right now is going to be to moderate what we call the Incredible Investors Panel. Actually, Stefan found no better name than this one, and it's a pleasure to have with me Paul, Philippe, Amit, and Eric. They usually would need no introduction, but if you are ready, maybe I would ask you to quickly introduce yourselves. And start by telling us an investment that you did during the pandemic and why.
Sure. Well, happy to start. Hi, everyone. Very happy to be here today. So thank you to the Indico team for inviting me. So I think one of the investments I made in 2020 is a company called Melio. So it's a company out of Israel addressing the North American market, and they provide a payment solution for small businesses. And to me, it was a lot of digitization happened in payment on the B2B side or B2C side, very few on the B2B side. And so I happened, basically, it was interesting because I signed the term sheet in February, so it was pre all this COVID craziness. And then basically the day we signed the term sheet, right after we signed the term sheet, all the world went into confinement. And so like, oh, what did we just do? Like, what's going to happen? So it was a very interesting time. We're happy to proceed with the investment. And actually COVID happened to be a real accelerant because everything was moving online, payments were moving online. So the company basically had its transaction volume grew, close to 10 times, in the past 12 months. So it was a crazy ride.
Great, thank you. Who's next? Eric, maybe you can go next.
Yes, hi, Eric from White Star Capital, so founder and managing partner. I live between New York, Paris, and London. Currently in Europe with this pandemic that has changed the life of many of us. We've seen for us rather positive impact for our investment as a result of COVID. None of us wanted to see this, but I think it forced a number of the traditional industries to accept technology faster. And clearly, I've been extremely impressed by how fast everyone in the old value chain has been able to adapt and adjust. So it's been food tech, it's been mobility for us, it's been future of work. Frankly, we've seen just great outcome, and I think Europe is showing to be a place where there's very big companies being created now, and we're extremely positive about the market now.
Happy to go next. This is Paul Murphy with Northstone, one of the partners here. I've been fortunate to work on a few investments with some of the folks on this panel during the pandemic as well. I think the first thing that's worth mentioning is that most of us got it wrong. I think we all hunkered down in the spring, assuming this was going to be like 2008 or other times of crisis, and the capital markets would dry up and everything else. But we couldn't have been further from that. So we doubled down on a few investments, Hopin, which we did with Excel. We invested a few times since, Tier, which we did with Indico and White Star. And then, I've led two investments in the last few months. We haven't announced them, but one of them is in the kind of education space, and one of them is in the logistics space, which we think will be, big beneficiaries of everything that's changing in our world right now.
Thank you. Amit, you had the pleasure to visit us quite recently. What excites you these days?
I did indeed, and Well, it's lovely to be here, and it was lovely to visit you as well. A couple of things that I'll echo really quickly with what Eric and Paul said. Some of the greatest companies get created at times like this, right? We've seen this in history. And so between Jet Ventures, which is the fund I run, and the Silicon Valley Blockchain Society, we've been investing in the intersection of IoT, AI, and blockchain. And to echo what Paul was saying, in terms of the adoption of and I think Eric mentioned as well, in terms of the adoption of newer technologies quicker into the enterprise, it's been a no choice model rather than a let's investigate this into the future. And this is why, most times when you have down circles like this, you do see a massive adoption of technology. You do see some great companies being born. And so we're starting to see a lot of companies come through that fit into that technology intersection for us, but starting to solve what we like to look at, either the future of health, wealth, work, and oftentimes cloaked in purposes of impact as well. And so for the second half of 2020, we saw more companies, more founders trying to solve for bigger problems, which in the past, when things are going really well, you see a lot of companies that are just, they found cool technology, but they're not trying to solve big problems because they can, play with things. Times are great. There's a lot of free money. And then that has intersected really well with what we're seeing happen with the crypto markets as well. And so there's been a lot more liquidity, which means a lot more earlier investments into companies that otherwise may not have been created. So very, very bullish as well in general.
And if I might add up one thing on the crypto sector, we've announced the closing of our first specialized fund in digital assets in September. And this is a sector where we've seen tremendous growth since, not only because of the price of Bitcoins and all those cryptocurrencies, but we've seen a fast acceleration by the traditional banks, traditional capital provider to go into this. And this fund has been oversubscribed, and you end up having so many opportunities there. And if you combine this with SPAC, because it's also access to capital that we're seeing coming in Europe now, we've been, and I'm sure Philippe, Paul, as people present in Europe, we've been contacted by many American provider capital that think that we can do some great SPAC transaction into the European market. I remain prudent on this, but we see a lot of people seeing this as a catalyst for tremendous growth in the years to come in the tech industry.
Now my question is, are you taking crypto for the investment in the fund, for still using the traditional way of investing, which I think there's still a lot to be done in the sector here. And I think this is a great start for us to maybe take a deep dive into the sectors that you are personally excited about. Paul mentioned a little bit the new investment in education. Philip keeps saying that everything is in the cloud now, including doctors. So there's doctors and banks, which clearly is a surprise, but given the pressure and the changes that have been going on in the world, like for us, it's really not a surprise. And Eric, yesterday, and we were discussing offline, and you shared very detailed internal pieces that you have around mobility and food tech. Maybe we can start with you and then hear your thoughts on the sectors and the industries and what's to change particularly. Because even thinking about mobility and logistics, there has been massive amounts of money invested in these industries in the last 2-3 years, but still right now we are in a very special moment where things are accelerating. Eric, can you tell us more about your thesis on these two sectors?
Yeah. No, I would try to focus on food tech as in mobility. I think Paul has as much to say as me in light of the co-investment we've done on Tier with you guys. But food tech has been a tremendous sector for all of us. I mean, we had the benefit of a large exit in October when Freshly in the US was sold to Nestle for 1.5 billion. That's been what we've seen in the last 2 years, number of us investors, but also consumer trying to switch the way they consume food, the way they get access to this food, the way food is delivered, the way food is supplied. And we also have now those new, what we call next generation food. I mean, cell-based meat. All of this is coming at a very, very fast pace. And we're just astonished by the level of profitability that those industry can bring. It's just not concept that seems interesting that are not making money. I mean, we are generating good cash flow in those sectors. In the UK, we've done a good investment in Butternut Box, which is food supply for animal, and the motto is around trying to feed your animals well so that you can extend their lifespan. And what we've seen with the analysis done by the Butternut Box team is that by feeding your dogs the way Butternut is proposing, I mean, you extend the lifespan of your dog by 40 to 50%. So it's not only making money, it's also making change into habits that have long-term positive impact to the world. And then in Asia, we've done also Ghost Kitchen and a firm called Damacan that we've done with Rakuten, which is doing also quite well. And we have 3 or 4 deals in the pipeline at the moment into this sector across these continents, where we just think that this current environment where you no longer, or you don't want as much to go get your food in a traditional store, is really giving an opportunity to a new generation of entrepreneur that can transform what has been so far quite a traditional industry. And in this industry, we're seeing a very, very good momentum at this stage.
I mean, we also have, we are proud investors at Barking, which is also in the pet food space. So we know very well how these types of businesses and these services are in demand. So clearly a winner and a sector where a lot will change in the next couple of months, if not years. So Paul, besides education has been a sector, I think like 2 years ago, maybe investors would run away from education investments because there were like a couple of big bets before that didn't deliver on the expectation everyone had. Like what's changing in education, and are there any other sectors you are particularly excited about?
Yeah, I mean, I think that the biggest thing that's changed with education is all of us that are parents now have a front row seat into how insufficient the technologies that we use as business people work for kids. It's I think depressing, frankly, just to see how uninspired kids are in front of a screen. So I think that there's a lot that's changing. I mean, I'm not thinking about it as kind of one sweeping solution, platform solution. I think that there's always been this holy grail of entertainment mixed with education that has been really difficult to reach, but technologies have changed. There's some really amazing teams that have been formed. So I think what we're looking for is, and I come from a background, having started a game studio previously, I'm looking for AAA kind of gaming founders that are thinking about how to make entertainment which doesn't sort of destroy your mind, which is slightly beneficial for you. And that's the kind of area that I'm seeing more and more companies come up and just that, are interesting for us. So yeah, that's one, but like I said, that's a sort of early bet. We're looking at a couple companies in the space. The other one that I mentioned around sort of logistics and food, I think everyone on this panel has a bet at different stages there. I mean, I think online penetration of shopping and food has obviously gone up out of necessity. And again, I think we all are sort of scratching our heads wondering why we have to wait a week for our groceries to get delivered. and so I think there's got to be better ways for that to happen. So yeah, I think these are things that I think, like others have said, just 10 years of change has gotten squeezed into a year. So there's just so much opportunity out there for digital and transformation.
Alex, maybe you can give us your input on what still can be decentralized, taking advantage of crypto, and then like we move to the cloud, because I know Philip has like extensive thoughts on what still is going to move to the cloud. So maybe we start with you, Amit, on this one.
Yeah, look, I think there's one of the early investors in the crypto space, a guy, investor named David Johnston. His theory has always been, what can be decentralized will. And it's we try and take a non-absolutionist approach to decentralization. It's if you ask most industries if AI is a relevant part of their roadmaps and their businesses, if you came across any business that said it wasn't, I will introduce you to a business that's about to shut down, right? That's a terrible myopia. The same is not true with decentralization, right? You've got to be quite a bit more practical about decentralization. So we're always looking at companies that are using decentralization in a really clever way to either solve for some of the challenges that centralized categories cannot solve for, or might have actually created because of centralization. 2017, 2018, 2019, the focus was still on what we would call a lot of layer 1 and potentially even layer 0 solutions. We're now starting to see the verticalization. So people actually starting to say, can I use aspects of either DLT or kind of the token economics on top of that to solve for a particular challenge. This is a company we invested in recently, very early stage startup called Phenium, going back into food safety a little bit. They've got a supply chain solution around food safety, entirely on the blockchain and everything that can unlock on top of that. We're starting to see interesting plays in the layer 0 support area around decentralization. A startup called Source that we're invested in is like the data management layer for the decentralized world. And so, helping manage in a decentralized way data that's flowing through between, different services. Again, this applies a lot to aspects of provenance. And then finally, where we're seeing a lot of interest in the decentralized world is some of these foundational elements from a use case perspective. So identity being, one of them at the foremost. For us, when we look at the future of health, the future of wealth, the future of work, the one thing that ties a lot of this world together, as we've seen, being accelerated during the pandemic time, especially during the shutdown time, is, how well your data travels between different aspects of your life, be it health and then wealth, because obviously wealth was largely affected and shut down because of health. And companies like Source that are helping solve for those data interchanges, combined with an approach to decentralized ID, so we don't get down, and it's a whole different rabbit hole to talk about what's happening with deeply centralized social media, for instance. And so those aspects of trying to create more of self-sovereign ID around how data is created and moves around, with that newer forms of thinking about ownership and control over that data. You can see how that starts tying into decentralization. But we're excited about the fact that over the last 12 months, we've only seen really interesting companies not just build stuff because they can be decentralized or they're on the blockchain, or they take your choice of buzzword, but they're using it cleverly to solve deep verticalized problems.
Yeah, clearly, like traceability, also one of our dear portfolio companies is in the space, and we've seen more and more traction on that side. So Philip, like, there's so much we could talk about in regards to cloud and this shift more on the B2B side. I guess that's an area that excites me. And yesterday I was looking at a report that you launched end of last year, not that long ago, where one of the highlights was so that the market cap of public cloud companies went up in a year from September 2019 to September 2020, almost $1 trillion. And your question was, are we unstoppable? And we meaning the cloud. Tell us, like, what do you think are still missing? And although we talked about mobility, food tech, logistics, decentralization, there's other sectors we didn't mention, like AI. I mean, it's touched a little bit on that, mental wellness, and the doctors being in the cloud finally. What are you excited about, and what do you see as these change in an opportunity? Because I think tough times are also times of opportunity in regards to the cloud.
Yes, thank you for the question. I mean, we're at Accel. I mean, I think we do love cloud on a global basis. We've invested in more than $5 billion in 250 companies so far, and we have the privilege to work with companies like DocuSign, Atlassian, or UiPath in Europe. So this is definitely a sector that is very dear to us, and the progress this year in 2020 had just been terrific. They've been terrific globally. I mean, you mentioned the $1 trillion of market cap created in a year, kind of from the 75 or so public companies globally, but also I think on the private side in Europe, it's been amazing to see the progress. I mean, if we look at the cloud market in Europe, the way we estimated it for the first 9 months of 2020, it was $9 to $9.5 billion invested. This compared to 7 to 7.5 in 2019. So we're seeing a significant growth in investments. And what's even more important, in my view, is that we think this number is roughly half of the cloud investments in the US. So Europe went from being 1/3 of the US last year to half this year, and I would bet that in the next 3-4 years we'll be at par with the US, which is kind of super exciting and something that I don't think anyone would have anticipated. I mean, if 5 years ago you have said Europe is going to be at par with the US in 10 years, like everyone would have said, well, first you have to generate a $1 billion company and then we'll talk. And what's amazing, I mean, just talking about $1 billion company, just this year in Europe, we went from 16 unicorn to 25 out of September, and now I think we're at 31 already. And obviously TalkDesk's been one of them. So congrats. I think that's big miss for us. We'd love to have a Portuguese company in our portfolio. I think Portugal.
We'll make that happen.
Yeah, it's one of the countries where we haven't made any investment yet, and would love to do so. But I think beyond this growth, I think what's also very interesting is that it's not about just a couple of ecosystems where everything's happening. Like in the US, everything's very concentrated in the Valley, and some extent in New York and Boston. But here, I mean, if we look at the past 5 years, we've invested in 35. We have made 35 investment in 20 different cities. So I think one of the reasons why the growth in Europe is so important is because it's happening across an incredible number of cities, and they're all growing pretty fast. So that growth compounds, and that's why I think Europe is able to catch up with the US at a very fast pace. I mean, if you see UiPath is out of Romania, Miro, which is kind of an online whiteboard, is out of Perm, Russia. Like, who would say like Perm, Russia is going to generate kind of flagship companies in the collaboration space? So that's what I really like about Europe. And then if you compare cloud to the other sectors, and our estimate is that cloud investment represents around 40% of the total venture investment in Europe. So then obviously it depends how you define cloud, etc. But this is like a very significant number. And if you look at just pushing the comparison with the US, if you look at 5 years ago, the top 5 rounds coming out of Europe were from 75 to 165 million, so an average of around 100 million, where the US had an average of 230 million. And the largest round at the time was Slack at 413 million, where the largest in France was in Europe was 165. Now, if you look at 2019-20, the average in Europe is 330, the average in the US is 400. So we're still slightly below, but the gap is very narrow. And if you look at the largest round, I mean, in the US, it was Snowflake's at 480 million. And in Europe, it was UiPath at 568. So actually, Europe is winning on the largest round. I mean, it's really incredible to see what's happening right now, because, I mean, in many ways, you can say that, the European market on the cloud front is very close to be at par, if not at par with the US, on so many fronts. And that gets us super excited. So what do we see, what do we see next? And what do we think are the areas where we expect even more growth? I think, obviously, I mean, it's not going to be a big news, but like the work coming home is going to help push, all the categories around collaboration, also including some verticals like for doctors who need to book online, etc. So all those work from home is going to and need to do everything from home, I think, is going to be a big trend and continue even hopefully what's going to be post-COVID in the second half of the year. The second area I think is, and you mentioned it, Christina, is health tech. I think now the healthcare systems in Europe realize the need, for more technology. I mean, it's very interesting to see that, France and some part of Germany are relying on Doctolib for booking the vaccination appointments. So now you see more and more government
We need that in Portugal as well.
Yeah. So the governments are now relying on private technology for healthcare, which is something that is unprecedented in many ways. I think the third area where we continue to see a lot of growth and we expect it to continue is automation, which includes obviously the low-code, no-code platform, and anything that enables more and more people to automate small to big tasks, which is quite interesting. The fourth one is the fintech stack moving to the cloud. I think one of the big innovation we have seen last year is like really the growth of all these companies that are providing components for fintech, be it around payments, loans, etc. Everything you need. So any company will be able to offer financial services. And last but not least, of course, cybersecurity is going to continue to be very strong. I mean, SolarWinds, what happened with SolarWinds, was big. That boosted, a lot of the security company out there. So sorry, I spoke a lot, but I felt like, as you can see, I'm very passionate about that space.
Sorry, go ahead.
I can echo a couple of things on what Philippe just mentioned. First, on digital health, which is a sector we've been investing a fair amount of money on, both companies in particular in the US and Canada. So one is Parsley Health, which is holistic medicine, growing extremely fast online. And the other one is telemedicine for large corporate called Dialogue, which has been seeing unbelievable growth. And you will hear more about it early in the year in Canada. But one of the things that we felt in Europe was that it was a lot more difficult before COVID to get these industries that are full of lobbies to adopt all new technologies to help moving people more rapidly. And with COVID, I mean, it has forced them, as Philippe just mentioned, to really say, okay, let's forget the lobby. Let's just make sure the the patient are treated well and fast and rapidly. And it's opening a tremendous space in Europe now. It used to be more difficult because you have state regulation. When I say state, is by country regulation. It was a bit difficult to make it a European play, but I think everything is moving toward a direction that is quite positive, as we've seen in North America. So that's the first point. The second point that I'd like to echo, Philippe, is on the size of the round. We were with Indico and Nordzone and Tier that raised 250 million from SoftBank. I mean, this is just tremendous to see this. But last week we saw in Germany Clark raising 85 million from Tencent, and we had the Miro in France that was Eurazeo, Butternut Box that was Al Catterton. Why I'm mentioning this is that we're seeing now finally the access to capital at a later stage on those 50, 100, 150 million, but not only coming from the US. And it used to be only American providing the capital. Now we're able to do it on our own. We're able to have our capital provider coming into a market thinking that they are as interesting as the US. And I think this is really a big, big change we're seeing now. And they're not deal done on momentum. They're done on trying to get the best firm in an industry globally. And these can be in Europe. And that's the way those investors are feeling. And I think we should feel very happy and continue to do the work we're doing with European companies and entrepreneurs.
For sure. Sorry, go ahead.
Oh, sorry, Christine. I was just going to echo that point of both Philippe and Eric, actually, that we're definitely seeing that change, not just on the capital side, but on the LP side as well. And I think that the big difference that maybe was substantially accelerated by the pandemic, but the idea that I'll only invest in a in a founder who's a maximum of 20 miles away so that I can have coffee with them, which was the old VC adage, which you were probably familiar with when you were here in the Valley. That's gone away completely, right? And to Eric's point, you're looking for the best startup, best opportunity in a particular category. And I think that Europe, the reason you're seeing those numbers show up is that everyone's waking up and realizing that you don't have to create, and more importantly, grow the best startup in San Francisco, right? We're very, very acutely not just aware, but our approach is being able to find global deal flow and deploy capital globally as well. So many of the LPs in our network have stopped asking the question of, is this fund in North America? Are the deployments in North America? And I think that's, you're starting to see the results show up, not just in initial capital, but in these big rounds as well, right? And cost structures do matter, especially in a model where, very, very hard to see new campuses rising in Menlo Park and places around here in the Silicon Valley. Who cares, right? You're going to find the best teams where you find the best teams. Most of the models, like Philippe was saying, so many of the cloud models now also mean that the deployment and user acquisition is in the cloud as well. Why do you need to have a founder or a setup in a particular geographical location? So we're seeing a lot of that distribution start to happen, which is very, very exciting.
Especially with the big trend I see is that lots of successful founders that built their first companies in the US are now back. And there's other stories like Daniel from Spotify that's committed to fund the next moonshots in Europe. With the whole situation in the US, lots of founders are just embracing remote and coming back to their original countries. So, I'm a big believer in Europe, and all the statistics that Philippe brought us are just very interesting to look at, because we are catching up at a high pace, and those are great news. So we have 10 minutes left, time flies, but given that we are in the beginning of the year and most companies are planning at a time of an enormous uncertainty, which advice are you giving founders to plan for a year where, we don't really know what's going to happen? Paul, maybe we start with you and then we go around.
Yeah, so I think there's the things that you can you can account for and plan for, and then there's things that you can't. And my belief is if someone came to me in, the end of 2019 and said that they wanted to plan for the world changing in 2020, I would have thought that that was a bad idea, right? I think that, so right now, I don't think anyone should assume that the world's going to be back to normal in 6 months, no matter how quickly the vaccine rollout goes. So I would assume that things, when it comes to my own founders, I would say, assume you're going to be remote, at least for this year. If you can get teams back together earlier, that's great. But don't assume that that's going to be the case. If we have a few companies that have exposure to things like travel, the guidance for that one company in particular is assume 2021 is going to suck just as much as 2020 did. So don't let your foot off on the kind of cost saving measures yet. I think beyond that, most, like everyone else in this panel, most of our companies have extreme tailwinds with respect to what's happening. So I think the guidance then goes the other direction, is don't assume that the, rosy days are going to continue. It's going to get more competitive. Incumbents are going to start looking at the spaces that you're in. Other startups are going to be kind of going after your markets. And so, don't get, I would say lazy, but don't get complacent with all the success you had last year.
Eric, you go next.
I think we share this point of view that 2021 is not going to come back in the next 3 months. I think for us, we're trying to see the next 6 months, 9 months. So I think we are clear. It's true for our team. It's true for each of the companies we've been backing, and that's true across continent. That nothing will start with office presence before September. We don't think that this will be feasible. I think there's this tendency, because there's a lot of money going into the tech industry at the moment, to just try to maximize raising at very high valuation. We're seeing this at the moment. I think that's good, but what we're trying to get our founders to focus on is to make sure that their balance sheet is solid for the next 24 to 36 months. And even if companies were not ready to raise, we've asked them to try to see if they can raise, even if it's not done at prices that are as compelling as it could be in 3 to 5 months. I think now it's solidify your balance sheet, make sure you're not doing anything crazy, benefit from this tailwind, of course, but I think focus on cash and focus on making sure that you solidify your cap table. I mean, if you're alone at a company as a fund of our size, or Philippe or Paul, I think our tendency right now has been to try to bring other partners around. We've seen it on Tier with Paul and you. The fact that we were not only one fund at the table during this more challenging period allowed us to together be strong, to do the right thing for the company and extend the runway. And I think at the moment, it's more a question of strategy. Who do you partner with within our company to make sure that the next 24 months is done with a focus on the business and not just trying to manage a second tsunami that might come, or it might be a third or fourth one in this case, because we're at the almost third wave this time.
Amit?
Yeah, I think, there is I echo what Paul and Eric said. There's a general excitement about, the calendar year of 2020 being over on one hand, and, everyone riding these tailwinds, and that's been juxtaposed with this idea that 2021 solves everything, right? And, I honestly don't think much is changing, other than the fact that this is one of the rare times where, as a founder, you not only have a rearview mirror that has more pockmarks than ever before, certainly in our lifetime, but you've got a pretty nice viewfinder for the future, because we know that nothing is going to change in any rapid time. But 2020 has really laid out a footprint for us, or a roadmap rather, for what the future looks like. By the time vaccines are fully rolled out, we're closing in on the third or fourth quarter of the year, if we're lucky. And that's not going to get the world back to any sort of old normal, right? And so it gives founders this really nice blueprint to think about, the fact that on one hand you've got to be a little bit more capital optimized, like Eric was saying. We're going to see valuations start to crater a little bit more. They'll normalize. We're starting to see that a lot more in Silicon Valley as well. And so the combination of being able to still look ahead and say, look, like with most startups, we started out because we were solving a small problem, or we were excited about the technology. This blueprint for 2021, 2022, and maybe a few more years beyond allows you to think about the kind of solutions you can start, pivoting towards, focusing on, that are going to be huge opportunities, because that with things not going back to normal in a flash, the first point that Eric and Paul made right at the beginning, which is, companies, enterprises, verticals are going to continue to spend way more on things that perhaps they would have, set out, especially things that went online, for the future. And so caution, but incredible optimism.
Also happy to give my view as well. To some extent, I think 2020, when the pandemic started, was a very predictable year. I think if you'd spoken to, in terms of what's happening with the virus, I think everything's happening on the public market, etc. I think that's different. But in terms of how the virus impacted the life of people, all the epidemiologists like we spoke to, they all say the same thing. It's going to go by wave. There's going to be a restriction. It's going to go down. It's going to be a reopen. It's going to start again. And that's exactly what we have seen. For 2021, there's a lot more uncertainty of what's going to happen, because we just don't know how the vaccine is going to be effective on at this population, like at wide scale. Like, we have tests, but we don't know if at a wide scale it's going to be effective. So I think watching Israel is going to be super important. I think what Israel is going to be the first country to vaccinate 80% of its population, because that's how it looks like. It's going to be done in the next 4, 6, 8 weeks maybe, and then we're going to start to see how the vaccine is going to impact people. Are people vaccinated? Can they still transmit the disease or not? I mean, this is like one of the huge factors that can swing things this year, because it makes the number of people you need to vaccinate it, from 80%, if you can transmit it, down to 50%, or 60% if you don't. So like, huge impact. We also don't know how the different drugs that are under development, when they are going to be released, how effective are they going to be. We don't know if just vaccinating the elderly is going to be enough to basically relieve the pressure on the health system, because once you do that, I think it's a slightly worse flu. But the big problem right now is just the pressure on the health system. So a ton of uncertainty. Personally, I'm optimistic that the vaccine is going to work, and so I think by June we should get to more normality. I mean, travel is still going to be restricted in some areas, and depending on how the vaccine is rolled out in the different countries. But I do think that hopefully by June things will get more normal. Now, at the same time, countries have raised a ton of debt to go through this crisis. A lot of retail, restaurants, etc., hotels, may not come out alive of this crisis once all the aids will stop. So we don't know what's going to be really the state of the economy at the end of this, and there's going to be a ton of debt to repay as well, and how the governments are going to deal with it is also a big question. So a ton of uncertainty, but like, if I have two advice for the two pieces of advice for the founders here, one would be raise as much money as you can as early as possible in the year. I think right now is the best. Figures, you never know, right? But I would say it's a very good environment to raise money. maybe it can get 10% marginally better, but I can also tell you that the chances of it getting much worse is much higher. So I would go out, raise as much as you can. Valuation are very good. So just do that while things stay the way they are. And the second advice is just this year is going to be, I think you have to adopt a strategy under uncertainty, meaning like we don't exactly know how the year will play out. There are some very strong tailwinds, as many people on this panel mentioned, that you have to take advantage of. So you need to invest and make sure you're not left behind, but just don't lean over your ski tips because things may change. So I would say that would be my advice for this year.
I mean, like it's always difficult, right, with the uncertainty. But thank you so much. It's great advice, and I'm sure like the founders that are with us today really appreciate it. So because we are approaching the time, so we are running out of time. As a final round, really quick, 30 seconds each. Please give us like a piece of advice for the founders, either something that you believe they can't miss at the early stage, or a book, or something that they should pay attention. So 30 seconds each to end the panel. Eric, you're ready, it seems.
Wow, you got me on the spot on this one. I think anyone. I mean, my advice at the moment, and it's been like this for a few months, is don't travel. Try to stay close to your business. Don't ask your team to travel. Try to do everything online, and the next 2 months will be crucial for many of us. So, I mean, above giving advice on money and so forth, at the moment, people need to stay home and make sure they do their best with what they can with the technological tool we have. I mean, we're in the middle of the storm now. It will be important that as a population overall globally, we try to calm this down, because we cannot have people dying the way they're dying at the moment.
Amit, 30 seconds.
I would say that this is an opportunity because of what happened with the pandemic and how the world fundamentally changed. It's an opportunity to rethink how we think about the market, and more importantly, how we think about the people that founders are targeting. So the one piece of advice I would have is change your mindset from "this is my target customer" to "this is the human I serve." And the company that you will create based on that sentiment is going to be far more resilient to the times that we have been thrust upon, and the world that is going to evolve from that. So it's a core fundamental change in the way that we think about the people that we're serving.
Paul.
Yeah, so I would say now it's maybe tempting for founders to chase markets that they think create a good business opportunity, maybe more tempting than ever, but I would just say stick with markets that you understand, products that you understand, build for yourself if you can before you build for someone else. I would say stay focused.
Philip, last but not least.
Yeah, so I mean, for me, I would say stick to your mission and vision and dream. I think this is what's going to make you successful, and be bold. I think the world belongs to people who dares, and I think who dares wins. So don't be afraid to take a bold move. Obviously, in the context of what I said before, but to me, that would be my closing thought.
What a great ending, be bold. That's an amazing statement to end with, and a very important message for all our companies. Although they are in the early stages, they've accomplished a lot, and we are really excited to be here today. So, dear panelists, it was really a pleasure. I would love to welcome you with a glass of wine in person in Lisbon, but maybe next year we will be able to do that. So really appreciate your time. Stay with us to hear the amazing pitches that we're going to have right after. And to give everyone an overview of how the afternoon is going to unfold. So each company will have 10 minutes to pitch. then they will be paired with amazing investors that are going to do like a 5-minute Q&A at the end. And it's with great pleasure that I will welcome Michaela, founder of Pleasy Play, paired with Marvin Liao and Yannick Oswald to ask difficult questions at the end. Stay with us.
Thanks, guys.